Hi everyone and welcome to today's morning report on Thursday the 17th of March with me, Rich Pro Market Analyst at Handit Markets. We've had this Fed decision out and it came in a lot more dovish than the market had been anticipating. The Fed really was quite downbeat and also changing its dot plots, which was the big unexpected move. 2 rate hikes now expected in 2016, down from the previous 4 that we had in December, and also the Fed continues to be worried about the international situation, and also they sort of suggesting Janet Yellen was suggesting that the Fed was willing to run up inflation to make sure that the recovery was in traction. So what we've seen is a quite strong move against the dollar today, and not only that, we've got Treasury yield sharply lower. Look at that 2-year, big turnaround on the 2-year Treasury yield there, and the 10-year as well, sharply lower in the last couple of days. We've got the US dollar, which is now sort of, well, 95.20. It's actually below that February low, so it really is a strong breakdown, and certainly that has implications for euro dollar as well, and a lot of these currencies are sort of turning around. The dollar is actually weaker against all of the major pairs today, major currencies today, and also we're seeing strong moves on the likes of gold, oil, commodity prices, and equity markets as well. So really significant moves that we're seeing on this Fed decision today. Here we can see the oil price, which has looked like it was sort of possibly going to be correcting, but bang, it's really broken out to the upside above that 39 figure resistance, 39.56. So really strong move again today, almost 3% higher on the day, and it's breaking back higher again. So strong moves all around following on from this Fed meeting. Now, what else have we got to look out for today? Well, we have got first of all, you've got Eurozone inflation, CPI data for the Eurozone at 10 o'clock. Expected to stay in as it was at negative 0.2% that we had on the flash data. Then we have the US jobless claim. Sorry, no, it's a complete lie. We have the UK Bank of England monetary policy decision at 12 o'clock. Now, again, no change is expected there. Certainly in light of what the Fed came up with actually yesterday. So I can think the market will probably be fairly adamant on that, and also the minutes are released at 12 as well. So we'll see how the voting structure was made up. No change either expected on that. 9-0 in favour of voting for a rate on hold there. You've got the jobless claims at 12:30, expected to just increase slightly to 268, and then we've got the Philly Fed business manufacturing. The Philly Fed business index, which is has an impact on the market, and expected to come in negative 1.7. So still negative there. That's not all that great. And the JOLTS jobs had a spike up to 5.6 last month, expected to come down a bit to 5.5 million this month. But the markets I think are probably going to be more focused on reaction to the Fed rather than all these sort of minor US data points here today. So that takes me on to my chance today, which is the Aussie. Now, we've had a breakout on the Aussie. Really strong move, came helped by the Fed, but also helped by strong Aussie unemployment data today, above that 76 big figure level. Now that sort of continues this move, and I'll sort of zoom back and I'll show you how you've got these big figure levels. 76 was an old floor, and that's a big resistance broken through. So you're now sort of up towards the next big resistance, comes in around 78.50 is the next level. That was from June last year. So this continues this recovery that we've got in the Aussie, helped by the strong gains that we've got in commodity prices as well, and it certainly looks as though this is a strong move. You could even, if you're going to get really bullish about this one, you could probably make a little bit of a bull flag pattern. That is really bullish, and to be honest, that sort of takes you up to the 78.50 level anyway. So it certainly looks as though the Aussie is on course for further gains in this one. We've had this breakout. We've got, this is the hourly chart. We've seen a slight bit of a consolidation around the breakout point, interestingly enough, using that sort of breakout as the basis of support for the gains in the European session, which are beginning to take off. So that sort of old resistance around 75.80 towards 76 figure, I think is a strong line of support now that you can use. You've got further support back at 75.30, which is today's low. So it certainly looks as though the burgeoning momentum indicators, certainly also on the hour, on the daily chart as well. You've got the MACD lines, which are strong, stochastics, which are still in positive configuration, and the RSI, which is holding nicely above 60 as well. So very strong momentum on the Aussie, and is certainly, I think, one to go with. So I wish you good luck in your trading on the Aussie today, and I'll speak to you later. Thank you.